Welcome to the Retiring Real Estate Investor podcast, where we will discuss how to defer taxes on the sale of your property, earning passive real estate income, and everything you need to know to go from active investor to passive investor. Join us as we interview passive investment sponsors, explore the journey of other retiring real estate investors, and share our due diligence process we perform to select passive investments. Investment advisory services provided by Insight Investment Advisors, LLC, a registered investment advisor. This podcast is only intended for clients and interested investors residing in the states in which we are registered to provide investment advisory services or exempt from registration. Please contact us to determine if the firm provides investment advisory services in the state where you reside. All content on this podcast is for informational purposes only and should not be considered investment advice. Material presented is believed to be reliable sources, and no representations are made by our firm as to another party's informational accuracy or completeness. Insight Investment Advisors, LLC and its representatives do not provide tax or legal advice, and nothing herein should be construed as such. Always consult with your tax advisor or attorney regarding your specific circumstances. Hello, everyone, and welcome to another episode of the Retiring Real Estate Investor podcast. I'm your host, Brandon Bruckman. I'm very excited to be joined by, from sunny Austin, Ana Klein is with us today, the tax boss, the tax strategist. Awesome title and name. And as we were talking before the show, how important is this to be the strategist, not the bookkeeper? I know that's what our clients are looking for, and probably yours as well. So, Ana, welcome.
Thank you so much, Brandon. I'm so excited to be talking about taxes. Nothing like talking taxes. My favorite.
We're strategizing for 2025 now, and this is an okay time to do it, right? As I'm sure most of us were in the rush to finish 24 and realized we should have started planning a few months sooner. Not talking about anyone in particular that should have done that, but let's start this way. Why don't you give a little bit of background for our listeners? Tell them about yourself and how you kind of got to this position as tax strategist.
Yeah, absolutely. So, like any other CPA, probably just started doing their, taxes for everybody. And really, the pivotal point for me that changed my trajectory and what I wanted to do with my business was I had a client actually from Wisconsin who had about 25 rental properties. They took a chance on me when I literally did know nothing about taxes. And I realized they paid zero in taxes. And I was like, by looking at a prior year CPA, and I'm like, wait a minute, what is happening here? So they don't teach us this in school, by the way. So anyone who goes to school and they don't. So everything I've learned from literally other people's taxes. So I realized, I'm like, wait, something is happening here. And I always tell people, actually, we know the Matis, and I am a lazy person. I'm like, I'm going to copy and paste what other people are doing, because if they've already created, I'm not going to reinvent the wheel, right? So I went all into real estate, learning everything about real estate. How did the tax work, and how did the tax code work for real estate investors? And then I realized that wealthy people were doing exactly that. They were buying real estate. So that's when it was like a pivotal moment. I was like, okay. Then I started researching companies that would help with real estate investing taxing. It was the big companies that had their separate, departments, but there wasn't somebody specifically, a couple of us, but not a lot of people specifically just in real estate. And I said, okay, I'm going to do exactly what wealthy people are doing. I'm going to do it myself, and I'm going to become an investor, and then I'm going to teach people how to do it. So that really was the moment that I was like, I'm going to become a real estate tax strategist.
Yeah, I missed that class in school too. We didn't review that of how to do that. I'm a little upset about it. That would have been valuable. I think I would have sat front row and participated in that one. So talk to us about what's the difference between, there's a CPA out there who's going to do my taxes. What's the difference between maybe what they're doing and the emphasis on being a tax strategist? What is a tax strategist?
Yeah, so I think the lack of education truly out there for business owners and real estate investors. And I say business owners because most of the real estate investors have a income producing business. I call it the printing money business on this side. And then they have the real estate to offset that business, right? They are just so used to honestly, even going into an office and dropping things off and saying, okay, call me back in 3 months, and then shaking in their boots, hoping that they didn't overpay in taxes, right? And that is what a CPA/tax preparer does. And we all need that. We need compliance. No matter what anyone tells you that AI is going to take over tax preparation, maybe for 1040s, I don't think it's ever going to happen after cost segregations and things like that. But it's throughout the year that you need to play the game to see how much money you're going to pay or not pay in April. And that is the big thing. So when people hear of other people not paying taxes, or, we can talk Elon Musk, but
Mhm.
even in a smaller scale, there's a reason for that. And if you did not know, the tax code is not written on that how to pay taxes. It's not how to pay taxes. So you don't have to know. You just have to hire someone who's a tax strategist who's going to take those the legal way, because there's a lot of shady stuff happening, just like with everybody, and making sure that they're implementing it in your tax return.
Talk to us about. All right, so if I'm working with a tax strategist, I'm not just dropping the stuff off in, oh, here's all my stuff. It's December. It's time to email my accountant, my CPA, go figure out what I owe in taxes. Talk to me about the process during the year. Like, how are people engaging with you? How do you help them? When are you reviewing with them? What does that process look like during the year?
Yeah, such a great question. And it always comes down to, let's start with the foundation of a good business owner. And that is going to be your good records. You need to have good bookkeeping. And I'm sure whoever's listening could like raise their hand or like cringe about how bad their books are. It does suck, but I'm always telling them to outsource this. People who are saying, "Oh, like I'll do it." It's like, I'm not lying. That is your limiting factor when it comes to tax planning, because you do not know how much money you're making. And fun fact, how much money you have in the bank does not mean that that's how much money you've made. So start with the foundation of having really good records. After that, you need to find a tax strategist. And the way that we work with our clients is, depending on their necessities, we either meet twice a year or 4 times a year. And it really comes from, hey, how much money are you making, Brandon? All right. What are your plans for the next 2 months? What are your plans for the next, year? Because we also have to take into consideration, the future. That's going to allow us to implement strategies throughout the year. So when April comes around, there should be no surprises unless you didn't have conversations with your CPA/strategist. So you have to really make sure that you have really good records and you are in constant conversations even throughout the year, like, hey, I want to buy a car. Can I buy a car? Not just waiting till April and then be upset at your preparer, because it's really not their fault. It's just you are responsible too for your own finances.
Yeah, I swear I've never been upset at my CPA ever. If if she says that I've never been mad at you, if you're not telling the truth, you've been extremely mad at me. Yeah, it's my fault. We should have engaged better. This is very interesting when you go through these processes with your clients during the year. You're learning, and it's kind of the way you got started. You're learning the things that they do to create wealth. You recently posted something about what your wealthiest clients are doing right now successfully and to make their lives better. I don't know if you remember some of that post, but please share some of those things. I think the top item on the list was they're buying back their time. That's exactly what you're talking about by outsourcing bookkeeping, right?
I mean, like, I go back to this and it's like copy and paste people. Okay. Like, that's my thing. Copy and paste what are wealthy people doing. And yes, it goes back to when I engage with clients who are at an insane level than me. I'm like, wait, what are they doing? Okay, I need to be doing that. And buying back your time, there's a book called Buy Back Your Time if you've never heard it, but I didn't really think of it. I didn't have like an executive assistant for the longest time. I was like, no, I'm a control freak. I'll do everything. And then I realized that my clients, I remember talking to a client who makes $20 million, right? Or in sales. And she was like, Anna, I don't even know what my bank password is. And I was like, what do you mean? That is insane. Now I don't even know it either, because I finally was like, okay, clearly it's working for her. So it's like all of the dumb tasks, I would say dumb, but like administrative tasks, whether it's at home, whether it's in your business, if you're still doing those, you're wasting your time on things that are more that you're better at the end of the day. So that's like the number one thing. They have bookkeepers, they have EAs, they don't cook. I mean, I would love that, but it's like, you get to a point where like your time is better spent elsewhere.
That is Probably number one on a personal level goal for probably myself and our business this year is to continue to outsource time. We've started doing it, and there's probably a lot more that we can do. On that list, I think too was some items about this is interesting that I think a lot of our listeners would like to know more about is buying and owning businesses, taking that revenue and profit stream, and then using that to buy real estate. Can you discuss sort of that strategy that the wealthy is using and how that works for them?
Yeah, so I think I'm going to speak for myself and a lot of things
Yeah.
I've seen. When I started my journey, I thought that I was going to buy a lot of single, duplex homes, and I was going to be, I was going to be so wealthy by the time I was 36. So I'm telling him 36, and I'm ready to sell all my single family, multifamily, okay? And I realized that buying it will take, you can do it. It's just going to take a long time for you to get to that point, right? So what I realized is that people, what they're doing is they're like what I said, is they're printing money in an operating business, right? So whether you're starting your consulting business, your law firm, or you're buying a business and they're just printing money here. However, here's the problem, Brandon. You can't, there's not a lot of things to offset income here when you're printing that much money, right? So where do the actual big deductions come from? It's big real estate. And that's what the wealthy people do. They have an operating business where they print so much money and they're like, oh shoot, I have to offset all this money that I'm making. Okay, now we go buy, multi real estate because that's what's going to offset the income on this business. And eventually, when we're older and we want to retire, quote unquote, we have actual passive income coming that's going to from real estate.
That's perfect. That's perfect. Talk about that in the context of, and I think we're kind of going down this path. So let's imagine I own that operating business. I can't really be a real estate professional, right? Which I want
Mm,
you to talk about what that means and what that tax status means. But then I also want you maybe to talk a little bit about the short-term rental loophole that you can kind of exploit a
mhm.
little bit if maybe you don't have that status. So maybe take those two together.
Yeah,
Discuss.
absolutely. So real estate professional status. So the best way, well, it's a complicated thing, but I try to make it as easy for people to understand. So when we talk about active income, I talk about your law firm, your consulting, your wholesaling, your realtor, your flipping business. That's active income, right? And passive income is your real estate. Those will never offset each other. So if you make $1 million in your active income and you have rentals over here, it will never offset each other unless you qualify for this little thing called real estate professional status, which we'll call reps.
Got it.
Very, very hard to achieve if you have a W-2 job on the side. So it's a very thing. And there's a lot of misconception that if you just get your real estate license, that's what counts. It has nothing to do with real estate license. It has something to do with way more than that. So if you have a business, and the best place to be at, to be honest, Brandon, is if you're married, somebody has a high net income, and then somebody manages the real estate. So, in order for that, for you to offset your passive income against your active income, rep status means the following. You have to pass these two tests. I'll make them super easy. And you have to pass both. Test number one is you have to work more than one half of your time in a real estate trader business. In other words, if you work a full-time job, let's say at Chase Bank for 2,000 hours, you have to prove that you work 2,000 hours in your rentals. It's impossible. Don't try to do it. Like you'll never sleep. Like people have tried it. The court cases are there. It's never going to happen. So, but let's say, so that's out of the picture. Or if like you own a business that is, let's say you're an attorney and you're printing business and you have rentals on the side, also not going to happen. Now, let's say you own a business that is like construction business, and you're building homes, or you're a realtor, a flipper. You already passed test number one because you're working all your time in real estate, right? The issue comes with you still have to pass test number two. Test number two is that you have to materially participate in your rentals. In other words, you can't just sit back, have your property manager do everything for you and you just collect it. There are a little bit of some tricks that we can do when you have a property manager and you have multiple properties, but that is the only way. And it's really, really hard to achieve that. So there's this loophole. Not really a loophole. We love to call it the loophole, but there's this loophole in
I
the
want to
code
end it.
against you.
All right, that's end it. No more loophole, right? Because people do this to us all the time on 1031 exchange. It's like it's loophole sounds devious, right? Like this is in
Yeah.
the tax code, and you referred to it earlier. Like the tax code for people watching on YouTube, the tax code is this big to pay taxes. It's this big to not pay taxes, and the things that you can do to reduce your tax bill. It's not, okay, we're throwing out loophole. We're calling it part of the tax code. It's a short-term rental tax rule. We're going to call it that. How about that?
I love that. Yeah, we should stop calling. You're right. The loophole just sounds so shady, and
Yeah.
we're like, we're not going to work with her. But yeah, it is actually in the tax code. It's legally, and I'll share some audit cases that I've gone through. It's actually really funny. But so long story short, we talked about reps. The short-term rental loophole, what it allows you to do is bypass test number one, which is the hardest test, right? So let's say that you are an attorney. We have actually a lot of physicians who realize that, yeah, I'm making a lot of money over here being a surgeon anesthesiologist, but guess what? If I'm not working with my hands, I'm not making money. So they're like, how do I offset that income? And when I don't want to be working 90 hours a week, and how do I make passive income? So they do this called the short-term rental loop code. The short-term rental code is the following. You can be a high net income earner and you can go buy a short-term rental property. Now, do your due diligence, because I always say don't do things just for the tax benefits. And essentially what you can do is if you make, let's say, $500,000 as a, physician, you can buy a short-term rental anywhere and actually like run it through Airbnb, VRBO, and you can offset that huge loss from that rental with a cost segregation against your W-2. So we had a client made about 880 on his W-2, bought a short-term rental, did a cost segregation, and he went from owing like 260,000 to like $140,000. So almost $150,000 worth of write-off. Now, you got to rinse and repeat the process, because if you don't do that every single year, you're back to square one. So this is where tax planning comes into play, and you need someone who tells you the good and the bad, not just, oh my gosh, you're going to get all this money back, but the next year what happens, you know?
Yeah, it's a good point, right? And we say it all the time on our side with the 1031 exchange as folks are going through that process is, you know what, paying the taxes isn't the worst thing that's ever happened. And people are aghast, like, oh my God, no, I can't believe you said that. It's like, well, if we can't make a good investment decision on the backside, then what's the point? Don't do that, right?
Mm-hmm.
That's just step back and step away from it. So, I mean, there's our things with the short-term rental tax rule that we got to do our due diligence on the property. And then you have to have someone to manage that too, right? As you go, like you are running that property. It has some time consumption in doing that as well, right? Are people skipping over those kind of key points?
I think the biggest point that they look at is when a lot of us show examples like on social media, right? Of like, hey, you can save $160,000, and naturally as a human, you're like, how do I do that? But then you realize that running an Airbnb is not passive. Running an Airbnb is like, what's the Wi-Fi code? Like that's the kind of stuff that you're getting to. So, but is it worth 160,000? I don't know. That's for you to decide.
Yeah.
And hopefully, and then hopefully, the city that you live in doesn't give you a regulation that there's no more Airbnb. So that's what I'm saying. Whenever there's something like this, do your due diligence.
I have a wild card question for you as you were describing that a little bit about how passive income and losses live here, non-passive or active income and losses don't mix. So here's a real life problem that we have our clients face all the time is that they're retiring from active real estate business. They're actually losing their rep status more or less. And they used to have active, they're now going to have passive. What sort of strategies would you help them think about as their income really shifts from completely active to completely passive? Are there things that they should be thinking about how they can reduce their tax bill? Because a lot of the goodies that they used to have, some of those goodies are going away, right? Especially as the basis in those properties as they exchange continues to drop, that income, every dollar that comes in becomes more taxable. Are there things that they could be doing or strategizing about that would help them?
Yeah. So a lot of times they're in their later chapter of their life, maybe. I'm not sure. But most of the time, unless you get the golden nuggets, that are 30 but usually when they're in that later chapter of their life, if there is no, and they're like, I just talked to someone today, they're like, I'm good. I make this much amount of money and I have 6 commercial rentals. I'm 60. I don't want to do anything. And it gets to a point where you just got to pay the taxes, right? Because sure, we can start talking about putting money into IRAs, but again, you're in the later chapter of your life. So there isn't that much. Now, I will say this, hopefully your tax bracket is a little bit less. We can start maybe adding some, I don't know, some, what is the word I'm trying to look for? Um, just like, oh, repairs or supplies, things like that that are just so low hanging fruit. That's the word I was looking for. But you're probably in a lower tax bracket. If you want to be super risk averse, I would say there is investing in oil. Is something that is huge.
Mhm.
Again, do your due diligence. And the biggest thing with people who are older or in their older chapter in their life is making sure that you have this in a trust and that you are going to inherit this to the family members.
Yes.
Because that doesn't happen a lot.
Anna's watching me have a conniption on my face about this because I would say that, and I love all of our clients, and we make this announcement to them every year. I would say roughly half of our clients still have their properties in an LLC or in their own personal name. They're not in a trust. Yeah, I know. I'm going too. So this kind of dovetails into one of your posts. You talked about never gifting properties. Right. And so that's kind of maybe transition to some of that is we're getting to, and those are a lot of our clients, right? We're on our later stage of life, right? We're starting to think about these things. Why should someone never gift a property? Sounds like a
Yeah,
good, but not really, huh?
right. Yeah, I think it's like maybe like grandparents that who have had properties for a while. They're like, "Oh my gosh, Johnny, I'm gonna gift you my portfolio. That's amazing." And Johnny's like, "I'm not dealing with my grandpa." Well, my grandpa did, being a landlord slash counselor slash psychologist to the tenants. But here's the biggest thing. Let's say it's always great with an example. If you have a portfolio that your grandpa had and it was worth, he bought it for, let's say, I don't know, $200,000 back in the day, and then the 1988 or whatever. And now he passed away. He gives it to you. He's like, hey, here, you can have it. I'm done with it. And Johnny's like, I don't want to do this. I want to sell it. If they gift it to you, what you do not get is the step up in basis. And what does that mean? That means that if you want to sell his portfolio, your basis is 200,000. What he bought it at back in the 1800s. So that gain can be insane if you sell those properties. To avoid that, what you want to do is have your grandpa I have trouble saying this word, inherited to you or like given to you as an inheritance. Because what happens when grandpa passes away, you get the step up in basis. So that means that if in next year you're like, I don't want it, I want to sell it, usually step up in basis is the same as fair market value. I mean, I'm sorry, fair market value is what you're going to sell it at. So let's say the portfolio is now worth 1 million. Okay, let's say you sell it for 1 million. You literally just made $1 million and paid zero taxes on it. So it's a huge wealth generating strategy. And they were trying to get rid of this back a couple of years ago because they're like, could you imagine not making, and when we're talking 1 million, we're talking, millionaires who do this. So making sure that you're putting your properties in a trust so that they are inherited to whoever you want.
Gotcha. Yeah, it's an item that we talk about often as a lot of our clients are making that transition using that want to make sure that they're able still to do the stepped up basis as they make a transition in the 1031 exchange from active to passive. It's one of their biggest questions. Can I still do the basis step up with what you guys are doing? The answer is always yes. You can own that asset and we're still able to do that. It's a really big deal. We use this kind of crude terminology of swap till you drop, which is, but it works if we're looking to defer tax and then eventually it's eliminated through that process as the code allows us to do, which is just phenomenal.
Yep.
You had mentioned before some interesting cases, and you had a post about this too as well about IRS audit. This scares everyone. This makes my skin crawl. Like, what's your scariest things? The it clown, giant spiders, IRS audit being like number one, right? Like, bring on the spiders, man. Like, I don't want this IRS audit. What should people do? One, when they eventually, this may happen to us, so we could get audited. How should people approach that? How can a tax strategist help?
Yeah. So listen, I get it. I always say that IRS audits are a pain in the butt. It's a lot of administrative work. Sometimes it does go to court if you want to fight it. Which just doesn't happen very often, but the biggest thing that we have seen with clients who get audited, now don't go say, oh, like this firm got audited more, so I don't want to go work with them. That's not how it works. The biggest thing that we're currently going through 2 audits right now, and it's for the short-term rental loophole, believe it or not, is records. Like I am a nagger when it comes to accounting records. And it's not I mean, it makes my life easier, don't get me wrong. However, when an audit comes, like they literally were asking for receipts for their automobile gas and oil expenses for this company that makes about $20 million. They have an in-house bookkeeper. Their records were great, and even the auditor said, "Hey, just so you know, you having really good records gives us more faith in you as a business owner." Like straight from their mouth,
Well,
and it does though because you're not joking. And here's the thing: they have a job to do, and their job is to get as much money as they can from you. So they're not going to sit here and play nice with you if you don't take this seriously. So should you be scared unless you're doing illegal stuff? No, but it's going to be a long process. I mean, we started this back in August. We haven't even heard back, and it's January. So it's a long process that you have to deal with it. But if you have good records, you should be good. And here's the other thing: if you make a mistake, and like we made a mistake or they make a mistake, they're not going to put you in jail. They're just going to say, hey, you can't do this. It's okay. You just pay the taxes. Okay, whatever. I'll make more money later. That's how we say it.
I like that. Yeah, so big thing is here, don't be scared. It's a nuisance more than it is something to be afraid of. So I'll slide it down the list. I'll move spiders, big spiders back up. But it is something you have to be prepared for, right? And again, it goes back to exactly what you said. Outsource this stuff so that you can have people who know, who spend their whole day making sure that records are accurate to sort of do this as opposed to you doing it. That's really good advice. As I kind of look down at a drawer full of receipts that I have here. They're here. We need some more. We need some more organization. Um, let me spin you to. I think it's interesting what you're able to do. This is a virtual business that you're running, correct?
Correct.
So that allows you can live wherever you want. Like we mentioned, you're in Austin now. How big is, on a personal level, like how big is travel for you? Are you really taking advantage of this virtual business situation? Sounds like yes.
Yeah, absolutely. So this really during COVID, we were just talking about how gosh long ago that was. It
Yeah.
really was a pivotal change, I think, for everyone to change how we view things because it used to be the old school way of, hey, go to the office, drop off your receipts, and come whenever you have a question. And it really, COVID was like, okay, well, we can't do that. So either you get your taxes done or you don't, right? It really changed people on being okay. Obviously, there's always going to be fraud. One number one question people say is like, "How are you protecting our stuff?" I'm like, "Sir, Chase Bank is getting hacked. If Chase Bank is getting hacked, like so is everybody else. So like, we're gonna try the best that we can, but it's impossible, right?"
Yeah.
So, given that we're able to work with clients all over the country, which makes it really nice. But the reason why I wanted to always do that is because it is travel. I didn't get to travel when I was younger. We didn't have the means or whatever. And now I'm like, okay, all my employees are virtual. Everyone can kind of work wherever they want. And we've definitely been traveling a lot. A lot of it we just write it off. Not everything, not like you see on Instagram, but we try to make a lot of our trips conferences and networking and just being better. And as you notice, all those masterminds are always in really nice places. And there's a reason for that because they also want to write it off too.
I'm into it. Um, it's no, it's good. We do the same thing on our end as well as we look at conferences for the year. We'll be in Orlando the second week of February, and we might extend that trip beyond that to do some more corporate planning. So yeah, we're doing the exact same thing. You had mentioned before, some of your goal when you looked at some of the real estate things when you started was I'm gonna buy these singles and duplexes and I'm gonna get rich. What are you looking at now? Like what is your focus in terms of the assets that you're buying or what you're focused on in terms of asset acquisition?
Yeah, absolutely. I still have them. They're in Southeast Wisconsin and they cash flow really great. Bought them at a really good. I think my lowest one is like 2.3%. So it's kind of crazy to give them up yet, right? So again, I go back to I'm going to copy and paste. And when I started talking to, bigger investors and what they were doing, I realized that they stayed in their lane. And I'm going to stay in my lane of doing accounting, taxes, tax strategists. And what I'm going to do is I'm going to invest with people who have their own lane when it comes to real estate. So what I started doing is I will be the capital partner, and as long as the numbers make sense, here you go. So recently, last year, we closed on an RV/mobile home park. I think it's in Indiana. I don't remember, but here's the thing: like the numbers made
Yeah.
sense. I've never been, so it's like that's where I'm sticking to. Hey, they're good at what they do, I'm good at what I do, and as long as it brings, makes sense, we can do it. So it just has to make sense. But I would be like, let me try to understand the cell phone storage unit. And then I was like, no, let's just invest in people who already know how to do that.
Yeah, and that's what I mean as advisors from our perspective. One of the side benefits in what we do is what I'm doing every day. Is myself and our team are evaluating passive investment opportunities. Well, we found places to participate, right, in some of those passive investment opportunities, which is a great thing to. It shouldn't be a deterrent of where clients invest their money, where we put our money, but it's not a bad thing to look at in terms of what we're doing personally and the benefit of doing that. So yeah, same way that you just find these folks that this is all they do. Like, I'm not going to go out and try to be a tax strategist tomorrow. I'm going to call Ana. I'm not going to do that.
Exactly.
Like, that'd be silly, right? Imagine if I called you and say, "Hey, how do I be a tax?" That'd be wild, right? Just employ you to do it. And it's the same thing on the investment front. That's a really great point. So I do think folks try to do these things themselves, and it's just too hard. There's just too much to learn and know them. It's the moat, as Warren Buffett would say, of doing those businesses. It's just time and knowledge, right? Dude, they didn't teach you how to run self storage units in school either. So it's practical knowledge you have to learn. Another item that you mentioned that I'm pulling all this from your social media posts, so I'm sorry.
I love that.
Which are great, by the way.
Someone's watching.
Go follow on all your platforms. Which one do you like? It's Instagram is the best for you, yes?
Instagram is probably, yeah, that, and our goal 2025 is YouTube.
Oh,
Just short, straight to the point YouTube, like, this is what this is. Okay, 5 minutes, 10 minutes.
oh, that's perfect. That's perfect.
Yeah.
So one of the other things you mentioned on this post was a life coach. Do you want to talk about that a little bit and what that means, and if what that was, the value that you found from that?
Wow, I honestly think that was my best in 2024. That was probably the best thing I did for myself.
Wow.
So, I will say that from a business standpoint, you can become super successful, right? Like, if you want it, I think in anything that you want. Then I realized I still had some issues personally that were kind of getting in the way of just even me becoming like an actual CEO slash leader.
Mm.
Being a leader is so different than being a doer. I mean, it's a doer is what you got to do. This is the result. Being a leader and dealing with employees and different things is what I want 2024 and 2025 to be. And then I realized I was, dealing with my own stuff. So again, my mentor, who is that $20 million lady. And I was like, how are you doing? You're married, you have two kids. How is this happening? She's like, I have this life coach. And it changed a lot. I mean, it didn't like, wow, I'm a new woman, but it made me realize that as humans, we all have issues.
Hmm.
And as much as Instagram says we're all perfect and your marriage is perfect and our relationship, it's like, no. Why don't you post what's really happening on a Friday night after a couple of drinks with your spouse, right? These are the issues that I decided to work on. And I've been married before. I was like, I don't want to make the same mistakes that I did after my first marriage. So I think a life coach for that, it just makes me a better leader, not only personally, but also for my employees.
Oh, that's perfect. And you're absolutely right. It is different skills. And I've, on personal level for us in a business, very fortunate that, myself and my partner, Josh, it's a yin and yang thing where, I can do more of the people stuff and the leader stuff and the strategic vision stuff. And then Josh is an amazing operator and great with our compliance work and the note keeping and the record keeping. And so we can kind of mesh that way and do those things, because it would be hard for us to switch roles. I'm just not cut out for that. I would need a lot of help to kind of switch. So fortunately, we have people we pick up each other's weaknesses and make the strong side stronger. So that's really interesting. That's outsourcing at like a really high level when you're like, you know what, I'm going to do everything I can to be successful. And I'm going to pay for it too. And I feel like there's a little bit of a hang up from folks on like, these things can't be cheap that we're outsourcing, but it's totally worth it, isn't it?
Yeah, I think that eventually we all have to switch our mentality that it's an investment in yourself that's going to, it's going to pour to everything around you, right? And you're right, it wasn't cheap, and it's not a deduction because I can't tell the IRS that my family issues are affecting my business, right? However,
Because I could definitely tell them that for real.
everybody would need therapy, including everybody in Congress, but that's just time for a different day. But like I say, I know I repeat myself a lot on this. I'm like, what are other wealthy, successful leaders doing? And not, not, and you got to take everything with a grain of salt, but it's like everybody has a mentor. Everybody's always like doing things like what they're doing. I want to be able to do so that hopefully one day I'm at their level. So,
Yeah, it's a great point. Like, I can't remember who has said it, but they made a comment that all the ideas are gone. So it's just finding ways to make things a little bit more efficient, maybe, or add value to someone's life. But yeah, it's recognizing the folks that are successful and saying, "Oh, how'd you do that? I can do that too.
hmm
Like you're doing it too."
hmm
As my mom would say, they put their pants on one leg at a time, just like you and I. So they're just people. So let's just figure out what they're doing and do it. Anna, this has been awesome. Anything you want to leave folks with? Where should they follow you? Anything you want to
yeah.
leave the audience with?
I think that definitely, like, for anyone listening, it doesn't matter like what chapter in your life that you're in when it comes to your financial standpoint. I think that if you feel that you can, whenever you look at someone else or someone you admire when it comes to financial status, like, one, they're not doing their own books. I can guarantee you that. Like, they're not, Cody Sanchez is not out there doing her own books. So it's like, again, how do you get to the result the fastest? And if you continue to say, well, I'll do my own taxes because it's easy. Oh, I will do my own bookkeeping, or I don't need a tax strategist because they're so expensive. It sounds horrible to say, but it's like then you're just going to be stuck on this side forever because you're not willing to grow. So let's take that investment, say, hey, this is an investment that I'm doing with Tax Strategist. And if someone's charging you $100 for whatever, you just what you get what you pay for, right? And of course, I love doing this. And we put a lot of free content on our YouTube and our social media, Instagram, so you can find us. Hopefully, you can leave the tag below when you put on the notes. But it's the Tax Boss Anna, and you can just find us all that information there. If you want to work with us, you can head over to our website and you can fill out a questionnaire to see if it makes sense to work together.
No, that's awesome. Anna, thank you again so much for coming on. These are gold nuggets here that folks can pick up on. I really hope they follow you and get those YouTube shorts. Great stuff. Awesome stuff. Thank you so much.
Thank you so much, Brandon. It's so fun doing these. I appreciate it.
Awesome. And everyone listening, thanks for listening. We'll see you next time.